Can everyone hear me now? Welcome to FACE, sponsored by Park Forest FX, your solution to any issue or search for a broker that suits your personality. Everyone doing okay? Give me Y if you are. Good. All right, Michael's bringing up Euro Pound. Let's start with the dollar. Oh, you're very welcome, Siavash. Yeah, we love working together. We have pretty good chemistry. We're each a little different, which is great. Okay, so the Dixie trying to follow through. The top still in place. Finally, the euro is showing some strength here. Let's look at the daily. Yeah, a little, starting to turn down. The 1 hour diverged, although it's already a little bit oversold. I still think 220 is viable. And initially, when I talked about it around 220, I was looking for 280. That's because we had some type of moving average up there at 280. It was probably back here. Okay. So it looks like the correction's underway. Let's look at the weekly. We're still higher on the week with a day to go. So it's got to get going. The off number's all the way down at 91.53. And I pulled up a chart of Aussie Kiwi, and I just couldn't believe what happened there last night. I think it looked wilder. Oh, I know what it was. It was this. So you think you had a top, or we wanted to buy it cheaper, then boom. So you know what? That's why a guy like Stelios, whom I admire, doesn't care about the squiggles as much as I do. Squiggle, jiggle, and he's still long and up 2% now. But there's been lots of action if you're not a patient guy, where you get shaken out of these things, right? The webinar's analysis, Chris, is about an hour, and then we have I try and bring in very good traders and analysts, newsletter writers, signal providers, interviews in the last half hour. And we have a good one today with Don Mead at 7 Sentinels. S&Ps have had a good rally. We'll see what Don is thinking in here. I'm looking forward to it. And then let's see, the one that I think is a sleeper that woke up on what the Aussie did, I mean, just based upon, is this one. Euro pound finally came to life. We need some follow through, but it held right at the 50% level. So we'll see kind of what kind of week we have. If they could still try and sell it off. But the weekly off number, we're very close to it. It's at 96 by tomorrow. I'd like to see some follow through and have this weekly candle turn green. But you guys know I'm looking for, a surprise move. I think it would surprise many back towards these highs. So we'll see if this happens during the dollar correction with the euro leading cable. And a lot of geo stuff. Missiles are being exchanged and shot at in Lebanon, Syria, Israel. So gold having a decent day. I still can't get excited about it. And I think something that would surprise most, but maybe it was just another sell, was the end got all the way back to the line. Check it out. Got almost all the way back there. I don't think it made a new high yet. High was 10.01 before it backed off here. So not sure what to do with it. Really done nothing wrong. Pretty good rally on the daily, you know, but we're right back at this line. I don't know if it, I think you could look at the range today. A low of 875 and a high of 110, and go with whichever way it comes out of the range. Maybe back under this low, 875, we have something to the downside. And above this high, it's going to surprise a lot of people and maybe go to 2.618 at 112.30 or 110.90. Anyway, yen bear, be careful here. See, I know some people talking 27.40 in the S&P. It's hard to see the yen falling apart on that. So again, I want to welcome all our viewers from investing.com. Encourage everyone to, at the minimum, take a trial and navigate your way around the website. The unique thing about ForexAnalytix is all the different types of analysis that's provided. Elliott wave, harmonics, candlesticks, it's all here on our traffic light page. We also have phone apps, tablet apps, and really a great team of analysis. Anyone agree with me that this is the best FX webinar on the net, paid or free? If you know of a better one, I'd like to go take a look at the competition, see what they're doing so we could improve. You know, I'm not saying there's never, you know, never room for improvement. That's why we're upgrading our website. There is competition? Okay, Craig. So check us out, try it. It's $1 for 10 days. It's right here. It's right there in the room where you could click on it. And also, I want to thank our sponsor one more time for having faith in us after watching us for a year or so, Forest Park Futures, and our good friend Trent that you can trust to help guide you to make good decisions if you're looking for a brokered solution. There is a rebate plan for our analysis, for our subscription outside of the US. And that's it. We'll turn it over to Blake now and see what he's thinking here on a Thursday. And was this BOE action that drove the EG today, Blake?
Yeah. And good morning, Dale.
How are you, buddy?
Good. And yeah, so the pound dropped initially on the inflation report, and you know, the Bank of England rate decision, and the comments about weaker inflation really knocked down the cable. And so the pound here, let me grab the charts really quick. Just give me a second. Okay, here's the pound. So the pound came off right after the rate decision, and then the pound took out stops below 135. Once the press conference started, then it spiked back up to 135.50, and now we're just kind of settling around the 135.20s. Mark Carney, he's not. Hold on, my head itches and I got a hat on. Hold on. Sorry about that. I got my son had a playoff game until late, like 9 o'clock. I didn't get home until 9:30, which that's an hour past my bedtime. So I was full of dust from the diamond, and so I took a shower and my hair was all jacked up when I went to bed, and it's even worse this morning. So I had a hat on and
what kind of shampoo do you use, Blake? I think everyone would like to know.
Actually, you know what? I use a store-bought brand. I use Old Spice because and now Old Spice. You know,
my God.
Old Spice isn't the Old Spice that you remember, Dale, from
I knew you were setting yourself up.
Hey, you know, you asked.
Well, my dad wore it. I never wore Old Spice. Okay. I wore a high karate, Blake.
Oh, they have they have all these new smells now that are really awesome, and so I love it. Like it smells so great. Anyway, that's neither here nor there. let's talk about the markets. All right, so the cable came off, and you know, a couple guys are trying to pick it off down here at the lows. I'm still a little nervous about the cable. I'm not playing it. I'm not trading it. I'm actually short the dollar Canadian, which I actually just put in a pattern in play on ForexAnalytix. If you go to the active patterns in play, you can see the new dollar Canadian short that I put on here. If you go over to let's go over to the dollar Canadian, you can see the oops, it's not allowing me to click over. This is the new platform, by the way. We're still trying to work out some of the issues, and that would be one of them. So I can do this is the previous platform that you guys are used to using, the current one rather. See, you can the dollar Canadian broke lower, and you have to realize that this dollar Canadian was a false breakout and has led to a breakdown, broke through support. And you can see the 4 hour, you know, we came crashing through support, and we set up a dark cloud cover, which has led to a bearish reversal. And now that we're down here below 128, I'm shorting it because I want to sell it on any rally to 128. If I can get more, I'm going to try to get more. But that's where my focus is at today, not so much on the cable because of this volatility. Now, Citibank had a last night. They had a pound New Zealand long going into the Bank of England, which was a great call following the RBNZ yesterday, and then it obviously slumped following the Bank of England. Now this is a big was a big decision with the Bank of England. There wasn't change in the MPC votes, which I think some people were looking for possibly a swing towards a more hawkish MPC in the BOE, but they didn't get it, and so we slumped here. But one of the other factors is the Kiwi. The Kiwi came under pressure with Adrian Orr, who remained pretty dovish. He's stated that that rates can go in either direction. They can go higher or lower, and they're not hesitant in pulling the trigger one direction or the other. So and the Kiwi sold off and has been really under pressure the whole time. Now, instead of trading like the pound New Zealand, the euro New Zealand might actually be the better selection, and I'm actually buying a little bit of euro today, and above 119 is where I start getting aggressive. The euro has, as you can see here, has been under a lot of pressure. We are at a point where I think the dollar, and I know I've mentioned this the last couple of days, but I have to pre-position this conversation dating back a couple 2-3 weeks ago, where I thought the dollar was going to squeeze higher. The dollar index has squeezed higher, and we have really done the dirty deed that we had been expecting for the last month. We've been expecting for the dollar to turn higher. It did. We've rallied, and now the question is, now what? And by the way, there is a blog coming out. It is going to be a free blog for those of you that are not ForexAnalytix subscribers. I'll be posting a blog regarding myself and the team, rather, regarding the dollar, what now, and how are we going to affect precious metals here now that the dollar has really shored up positioning in the market, and we've seen the dollar correct the way it's corrected, and because I think it's going to be a really helpful post, especially for those of you that trade precious metals. But going back to the dollar, the euro dollar has corrected to a point where I do see it as more of a value proposition down here. I'm not a dollar bull by any stretch of the means, and I've said that for the last couple of months. Even though I've been calling for a dollar bounce or a dollar correction, I'm not a long-term dollar bull. So the euro dollar has gotten to a point where I do think it is of decent value, and is liable for a rally back in the direction of the overall trend, which is higher. So I am playing that to the upside right now, and gingerly. I should say I'm playing it gingerly. I'm more aggressive in the dollar Canadian short, and and if you guys don't understand the reason why, let me take a moment to explain to you the reason why I'm aggressively short the dollar Canadian or long Canadian currency. I believe the dollar has corrected, and we've really left traders on the long side of the dollar Canadian when we busted above 129 and we reversed this week. Now, there's an ongoing NAFTA negotiation. If you're unaware, obviously everybody who trades FX should be aware that there's an ongoing negotiation with NAFTA. We feel strongly that the NAFTA agreement is going to get done in some way, shape, or form. Now, the component that's being really discussed, that is the contention of the matter, is really automobiles at this point in time, and that's the biggest hurdle for the NAFTA negotiations. And once we can get past the automobile issues at hand, we believe that NAFTA agreement, a new NAFTA agreement, is going to get done. That's going to be extremely bullish to the Canadian dollar. Now, you may think, well, Blake, if you know, a new NAFTA agreement is formed, you know, is that going to benefit Canada? Well, the reason why the NAFTA agreement is going to be more beneficial for the Canadian dollar is not necessarily because it's going to be more beneficial for Canada. It's going to be because the Canadian economy is running really hot right now, and you've got a Bank of Canada who is behind the curve. Okay, and being that they are behind the curve, the Bank of Canada really wants to let loose and starting to raise rates. They can't raise rates right now while we're in the middle of these negotiations. Once the negotiations have passed, the Bank of Canada is going to be extremely hawkish, and this is going to allow for the Canadian currency to really explode higher. Now, you could say, well, I don't want to really, you know, short the dollar, and I get that argument. If you don't want to short the dollar, don't short the dollar. You know, but being long the Canadian currency in some capacity, whether it's long Canadian yen, short Euro Canadian, short pound Canadian, those are the trades that I think that are other alternatives rather than being short the dollar Canadian. Me personally, I think the dollar has rallied far enough to where the dollar is liable for another correction, you know, and the dollar index back down towards 91 or maybe 90, and as a result, the dollar Canadian will probably slump back towards the 200-day moving average, which is 126.40, and maybe even below towards 124. But I'm already pre-positioned because I've been short the dollar Canadian since yesterday, and I'm looking to add again today. I'm really looking to lay in to the U.S. dollar Canadian on the short side. One of the other things that that we all have to be very considerate of is if a NAFTA agreement gets done, the index, the stock market index, the S&P, is probably going to be a beneficiary of that. So you see the S&P right now. You can draw this trend line however you want. You can draw it how we had it just a moment ago, which is like this, or you can draw it like this. We're challenging some pretty key resistance. If we break higher in the S&P, the break higher could be because of, you know, a NAFTA agreement getting drafted and done. We could see the S&P explode higher, which is going to just benefit the commodity currencies like the Aussie, the Kiwi, the Canadian even more. So I think the risk is that the S&P continues higher. We are in the month of May, Dale. This is sell in May, go away, but May is still, the end of May is still 20 days away. Yeah. So, you know,
Someone told me it hasn't worked the last 5 years, maybe this year.
You know, I don't, you know, I'm not 100% sure. You know, I have to go back into, let's see, May of 2017, we rallied. Yeah, we rallied. May.
We rallied the last 5 years.
We sold off in June here in May, but we ended up rallying throughout the rest of summer. You know, but remember, we were also coming off of massive quantitative easing, global coordinated quantitative easing. So the sell in May go away phenomenon, I don't believe is to be, really factored in when you got coordination of central bank. Right. Now
it's different.
Now it's different. And I do believe that the market can sell off May, June, maybe a little late going, we may taper off into the summer months. But I can't ignore the fact that the S&P could rally, on a brand new NAFTA agreement. The market's going to cheer it any which way you slice it. So, we might rally up to 2760. We might rally up to 2800, which I think is my best guess is where we're going is right here in the S&P before tapering off. So you have to take that into consideration. I think that the S&P could obviously benefit, from that type of movement, from that type of agreement. So again, I'm really more focused on the U.S. dollar Canadian, and also I forgot to mention, tomorrow we have the Canadian jobs report. So if I'm correct here, and the U.S. dollar Canadian is a good short, and we continue lower going into tomorrow, like let's say we get down to the 50% retracement, which is 127.60. We get down here, and the Canadian jobs report continues to impress, and we see a beat of Canadian jobs. We're going to see the dollar Canadian really slump, especially ahead of a possible NAFTA agreement being done. I mean, we could really get some tailwind behind the U.S. dollar Canadian on the short side, if the Canadian jobs report is stronger than the market expects. And the market's looking for 17,000 jobs to be created from Canada, unemployment rate of 5.8%. But like I said, the Canadian economy is running hot. I mean, if we create more jobs than that, let's say we create 25,000 jobs, or we match last month's 32,000 jobs, we could see the dollar Canadian really buckle here, especially given the fact that we have this nice false breakout from earlier this week. This squeezed the crap out of the market. This red box here, that squeeze, there was a lot of people that were short, and mind you, this 129 level right here. Let me grab a pen really fast. And you can't see it because I don't have it drawn, but from this point right here to this point right here, the 129 level was a 618 retracement, or 2/3 retracement from here to here. And so you probably had a lot of people leaning into the dollar Canadian looking on the short side. They all got squeezed out, and then we reversed. And that is a dangerous situation for longs, because what happens is you've got everybody that was short, they got squeezed out. Now you got people that are ticked off because they got squeezed out of their shorts, and it reversed, and now they're going to pile on because they're irritated. They're getting back in. They're revenge trading, if you will. You got all the longs that got caught, buying above 129, saying, "Oh, now this is a breakout. We're going much higher in the dollar Canadian." Those longs have got stopped out. So now you've evened out positioning a little bit, and now it frees it up for a continuation lower. In the event that we get positive NAFTA news, we get a strong jobs report out of Canada tomorrow, and overall we get some dollar weakness, which I think is a risk after the dollar has rallied so substantially over the course of the last couple of weeks. So there's a lot of things going for the dollar Canadian on the short side, should the dollar pull back from current levels. You'd mentioned precious metals. The only thing I want to say before I turn it over to Steve here is watch gold and silver. They're making a move, and gold above 1320 would be pretty bullish. And we're only a couple 3 points away right now. And if gold makes a rally above 1320, we might see a squeeze higher in the gold market, and that's just going to amplify some dollar weakness as well. But overall, you know, I am looking at the dollar. I think that the euro has to get above 119 to turn bullish. The cable is kind of off my radar right now. It's been a lot of volatility today, so I'm not sure what I want to do here. And you know,
what's the bond wedge look like?
You know, it still looks the same. The bond, we're not hitting new lows, which I was hoping we would, as we discussed yesterday. I was hoping we would, but yeah, we're making a higher low as far as today goes. But really, you know, the bond market gets above this 120 level. We get above 120, and then, you know, bonds are going to squeeze. Yields comes down. The dollar gets, you know, punished as a result. So, and the dollar yen is struggling. I mean, we're struggling at the 110. I had a short dollar yen yesterday, not yesterday, the night before last. I had a dollar yen short at 109.37. I took a loss yesterday. I got out at 109. I want to say 109.68 or something like that. I lost like 30 pips shorting it, and I'm a little miffed at myself because I said to myself, as long as we stay below 110, I need to stay short the dollar yen. And it rhymes, but I didn't mean for it to rhyme. But I said that to myself, and I didn't stick to my guns because I started focusing on the dollar Canadian, and I got out at 109. You know, like I said, 67 or 68, and we're slightly below that now. The dollar yen is at 109.60, but I got out of it yesterday, and I was thinking to myself, man, why did I not stick to my guns? But the fact of the matter is if the bond market rallies, yields are going to drop, dollar yen's going to drop, gold's going to rally, and the dollar may fall across the board. So that is something that I'm, you know, I won't hesitate getting back into a dollar yen short if I have to, even if I have a worse price. You know, I'm not going to let that one fall off the radar, because I do think that the dollar yen is at risk of moving lower. You know, we got a double top here that's setting up. It's moving lower if bonds really stage a recovery rally and the dollar comes under pressure. So, one last thing before I turn it over to Steve. The dollar Swiss. Watch the dollar Swiss. You know, we're struggling here at the, this is previous highs from back in October of 2017. Very overbought. Look at the daily relative strengths. This is more overbought than we've seen since, you know, way back in 2012, 2010. Daily RSI, we're extremely overbought here. If the dollar comes off, you know, the Swissie's liable to pull back a little bit. I think any pullback towards, you know, 98.50 is going to be a buying opportunity, but that doesn't mean that we can't pull back a little bit. So be careful with the Swissie. I think you should keep an eye on it, especially if we drop back below parity, which is, you know, the $1 mark, which is only about 20 some odd pips away. So with that being said, I want to pass it over to my colleague Steve. Steve, good morning.
Hey Blake, good morning. We have CPI data coming out, right?
Yep. Yes, we do, and that's why I've got to pass it over to you. I'm gonna pass over the sauce, and I want to wish everybody a great trading day. And again, I would like to thank our sponsors, Forest Park FX. You can get a hold of them. Maybe Steve, you can show our website and show the reimbursement program and the email at the bottom of our homepage. They can, you know, help you find.
Yeah, Skype contact as well. Absolutely.
Yeah, and they can really, you know, help you find the right Forex broker that fits your specific needs. Great group of guys over there. So take a look at Forest Park FX. All right, guys. Good luck today. Thanks everybody for joining us from the investing.com community. Thank you. All right.
GL, bro.
Okay, before we do that,
Yeah,
we're just a few seconds away from CPI data. Stelio, it's 0.2 we're expecting month on month. Am I right on that?
Slightly weaker, 0.1 came in. Jobless claims.
Yep.
Roughly in line.
Yeah, and we're already seeing the USD yen responding here. This is more or less like a double top so far. Of course, it hasn't been triggered yet, but we tagged almost to the pip the highs of last week, and we're pulling back. As I've said multiple times, I'm monitoring this ascending channel as a possible area of support. So, you know, this is going to be my confirmation that the correction lower is coming. We're also seeing the response.
Metals are really flying on the back
Yeah,
of this.
I'm going to have a look at them now.
Both CPI and core CPI missed by 0.1.
Yeah, so we're also seeing euro.
So good news for dollar bears from early this week.
Yeah, we're also seeing euro appreciate. It's going to be backtesting this 119.35 area that's broken. If we actually close above here, we're also going to have a morning star formation for the euro USD, which is, you know, a bullish signal. It should indicate, you know, that like a larger recovery might be coming in the days ahead. Yesterday we had a spinning top, so that was already a good sign of momentum loss. Stelios already mentioned the metals. Let's have a look at the metals. We had indicated several days ago how important this multiple confluence of resistances, of supports just above the 1300 area was. We're seeing a big rebound from there. For gold, if we also see silver, we're going to see that silver is going to be testing the 1675 area of soft resistance once again after rebounding from an important support level. Cable, this has been an extremely volatile day for cable. We had BOE today. The BOE's message was quite dovish. We had an initial reaction lower for the pound. Obviously, the market had to reprice within a month a lot of stuff because, you know, the market had become quite bullish, the cable, and then you know, we had only a few weeks to price from an 80% chance of a rate hike today to a very unlikely scenario that we would get a rate hike, which we didn't get. And you know, cable seems to be consolidating here. I have to be honest. I would be hoping for a rebound higher because I'm looking to be short. But you know, the more days pass and we consolidate below the 136, 136.20 area, the higher the chances that we're just going to push lower directly without even a rebound. Same thing with the gappy. We've said, we were also showing yesterday how important this confluence of supports was for the pound yen. We got a rebound from it, but you know, we came up, we retested the 200 DMA yesterday, we got rejected. We retested it once again today, we're getting rejected once again. In my opinion, if we dip down below the 147.50 area and we actually close below it, that's more or less going to be confirmation that the gap is breaking to the downside, and a lot more weakness should be coming ahead. Now, we were having a look at the Kiwi. We were saying how important this 69.70 area was. We had indicated that if we broke below that, the next area of support would be at 68.80, 68.70, 68.80. We actually didn't make it to that, but we made it to the pip, to the 78.6, which is at the 69 cent mark, and we seem to be rebounding from there. Let's see if this will actually manifest to a larger rebound. In either case, we've said that as long as Kiwi remains below the 71.80 area, we will be maintaining a bearish bias. Let's have a look at the DXY as well, because we've been talking about several dollar pairs. As I said about the euro before, same deal here with the DXY. Let me zoom in. You can already see that if the day goes on as we're seeing so far, this is going to end up being, you can see it here, an evening star formation. That's a bearish reversal signal. We also have some previous confluence of resistances at 92.60, 92.70. If this fails to act as support, I would then be looking for this scenario that we were drawing when we were first testing it. So, for example, we might see a push lower towards the 91 area. Depends on how long it takes to make it there. The 91 area by then might even coincide with this descending trend line resistance that is now broken, so it might act as support. So we're getting very close to some kind of a confirmation that the dollar is about to produce a bigger correction lower. And we already warned about it yesterday. Yesterday we didn't end up closing lower, but it was an obvious day that indicated that the upside momentum has definitely stalled. Today seems to be the day that actually initiates some kind of a move lower. In this case, I would not be looking for dollar strength to reestablish itself like immediately. I think that at least a few days of dollar weakness might be ahead. We should at least, in my opinion, make it down to the 91, 19, 92 area. We have the 200 daily moving average there as well. If not, as I said, down to the 91 area. So I'm definitely looking for more dollar weakness for some days. I'm positioned dollar short for the time being only through the USD NOK pair. I'm short USD NOK from 810. So it still looks good to me, especially if we close below the psychological level of 8. I think that we can easily push at least down to the 786, 787 area. It has been acting as support resistance multiple times. And as I said, euro is about to face previous support as resistance. If it does break above there, I wouldn't even consider it impossible to make it all the way back to this area, 121.70. Okay, the previous 38.2, it's also the low there, so why not? I mean, we can easily do something like that. Now there are obviously other levels to watch as well. The 200 DMA is just above the 120 area, 120.20. So it depends on how strong this reaction proves to be. It might fail even sooner, even earlier. But even if we push up towards the 121.70 area, there will still be a chance that we're going to find some resistance and resume lower. I'm not really fond of being short the Euro USD. I'd rather be short other pairs. So even at the rebound, I'm not going to be looking to short the Euro USD. I think the cable is a better opportunity, and some other pairs as well. So I'm going to be monitoring, of course, and making analysis. But as I said, my preferred, I have other preferred pairs to be short against the dollar when the time comes. We also Blake spoke about risk. I concur. I mean, this is the scenario I have here. I think that the S&P is currently pushing this triangle's resistance. If we want to be more certain, we also have this high at 2,717 roughly. I do think that a break above there is probably going to confirm that the move to the upside has begun. I said several days ago, while we were still trading in the middle of the triangle, that I have, since a significant time has passed from the first move that we saw to the downside, the more days that pass without risk breaking down from the 200 DMA, the more confident, the more comfortable I feel for the bullish scenario. So, that the correction was more or less in time by creating a triangle instead of in price. And, this remains to be the case. I even attempted twice to be long. Unfortunately, I got stopped at break even both times, but I'm going to be looking to be long once again. I think that if we confirm a break higher, there is even the possibility of eventually pushing to new highs. Why not? I mean, this is a very well-established uptrend. There is no question about it. Now, obviously, we have indices that are showing, how much of a bullish momentum there is at the moment. For example, take a look at the FTSE. The FTSE has had a V-shaped recovery. I mean, it's unstoppable. We've been monitoring several areas of resistance as a possible zones of a reaction, but nothing has worked. I mean, this is a V-shaped recovery. We've now gone like, what was it? What is it? It's 12.5% higher within like less than 30 trading days. So obviously at some point it needs to correct somewhat lower, but I would be looking, I would be approaching this as a buying opportunity. I mean, it's more than obvious that this move higher has been extremely strong. Zones of possible support, I think, are the 7,600 and below that the 7,450. I doubt we're going to make it lower than that, even if we correct, like perhaps down there and then higher. Obviously, the fact that it's somewhat inversely correlated to what the cable does, and the fact that I maintain like a bearish case scenario for the pound points in the same direction, right? Now, having to do with the pound, if it doesn't manage to rebound higher than what it did today, which it rebounded to 136.20, the next area of support is the 38.2 of the whole move higher from the post-Brexit low to the recent highs. That comes at 134.32. Another zone below that is just below 133. So I do think that if we fail to rebound higher, like rather soon, we can even push down to 133 without seeing a big recovery. And then perhaps we will get a larger rebound unfolding before lower once again. In any case, both the pound USD and the pound yen, I think, are good shorting opportunities. When we get the equivalent signal. Okay, let me open the question box. By the way, Dale, I don't know if you're here. I don't know if you saw crude. Our final target in crude was the 71.90 area. Today's high is at actually 71.86. So we, in essence, more or less hit the target. And I'm really looking forward to seeing what happens from here. I don't really have any more upside targets at the moment. I mean, the next target is quite high at the 76.50 area, because that's the 61.8 of the big bear move that started unfolding in the summer of 2014 until the lows almost at the $26 mark. But that's, as I said, quite higher from here. I am looking forward to seeing if this zone, the 71.90 zone, is going to create a reaction, and I would be more than willing to try my luck there. Okay, let me open the question box and see. If I would consider buying USD Turkish lira. Okay. Definitely. We said yesterday, first of all, that it seems that a correction lower is beginning. I mean, it was once again extremely overbought, sorry. Now, if I would be interested in buying the 415 area, absolutely. But, this is just in theory. This is a nice level for the uptrend to resume. But, I not only need to see it test that, but I also need to see it reacting from that. So in theory, as a plan, 415 is a nice area to be looking to belong. But, I wouldn't rule out even a deeper correction lower. But yes, in general, 415 looks like a decent area to establish a long if price action stalls there. CAD Swiss, let's have a look at it. I'm not going to... by the way, let me first show the CAD yen, because we were talking about it yesterday. If you remember, I made it very clear yesterday, and we weren't at the highs of the day. We were actually quite lower than the day closed. I said that, since the channel held, I do favor a break higher towards the 61.8 before the downtrend reasserting itself. And, it looks even better today, having broken above. We even tested the 50% feed from the move lower. Ideally, as I said, we can even push higher towards the 87 area, right? So I think this is still something I'm monitoring because it goes according to plan. I would be interested perhaps to be short. I'm not going to show the USD CAD because more or less I agree. We showed it yesterday and Blake covered it quite extensively. But let's have a look at the CAD Swiss since our friend here wants. This is the last time we had a look at it. We were down there. I said that why not? We could push higher towards this trend line resistance. Once again, if I zoom out, you can see how important this resistance is. Obviously, there is not a reward to risk opportunity anymore. I mean, look at how close we are to that level. I think that this level near the 79-cent area has a very good chance of at least initially rejecting price action. So we're coming close to a resistance. It makes sense if you want to try being short there. At least you will have a very well-defined risk for at least a pullback. Now, obviously, at some point, this formation is going to break. When that happens, it should produce some very decent follow-through. You know, in any case, if it breaks, I would not try to fade it. Okay, probably quite the opposite. Please explain the Nifty 15. Its likelihood not now to cross 11,000 as it's correlated to the dollar. Actually, I think the Nifty so far has been working nicely to what we expected. If you may remember, last time we saw it, it was up here. I said, why not? It can pull back towards the 10,600 area and find support there. That's exactly what it did. It pulled back to this area. It found support here. It was pushing towards the highs. Once again, it seems to be rejected for now. Let's say that for the time being, it remains trapped between 10,800 and 10,600. So you have a range now. You know, if it breaks above 10,800, I'm pretty sure that it's going to extend to 11,000 that you're looking for. Okay, now if it breaks below 10,600, the deeper correction is coming, something like this, perhaps towards the 10,400 area. But, you know, it looks decent for the upside. Okay. Let me see. Do you think the dollar Canadian is still unpredictable? Blake covered that extensively. Yeah, there is a high correlation between the Aussie and gold. There is no question about it. We've already showed with Grega last week that gold was actually overperforming Aussie when Aussie was extremely weak. So he said that this is one of the reasons why he thinks that any rebound in the Aussie can actually even produce finally a bullish breakout for gold, okay, which is a break above this descending trend line. So I totally agree with that. Let's also have a look at copper. Copper, as you see, is pushing higher once again. For me, I've said it plenty of times, the 317 area remains key. It's a confluence of resistances. If we do break above there, I do think that copper is going to be pushing to new highs. Also, copper historically has been very highly correlated on most occasions, not recently with the Aussie. The fact that the Aussie was breaking down and copper was like correcting lower in a very well-behaved manner, I think it says a lot. I mean, obviously a big rebound in the Aussie can also lead to a breakout in copper. So, you know, I remain cautiously bullish both those pairs. Whoa, CAD-MXN. Okay, I'm not even sure what's the last time I've checked that, but sure, let's look at it. As you see, it was a long time ago that we looked at this. CAD-MXN. Let me see what we have here. Okay, this is obviously an area of resistance.
Steve, just want to remind you that yesterday Greg has said we could trade above 1320, in the gold, but he was looking for one more flush
Lower.
area that I'm interested in, around 1285 in the gold.
Yeah. CAD-MXN. This is quite a riddle. I mean, this is quite a riddle in the sense, technically speaking, not very clear. I can tell you for a fact that, you know, this 1570 area is a very, very strong area of resistance. Now, you know, recent price action extremely choppy. I would have assumed that when we broke lower from there, this would have indicated, you know, one more leg to the downside, seeing how strong of a reaction this was from the highs. I mean, this was more or less an impulsive move lower. So perhaps an ABC, and still might be the case, but, you know, we should, if that proves to be the case, we need to see it roll over lower once again. So, you know, if we get a strong reaction and the move to the downside, I'm going to tend to believe it. Now, other than that, I would tell you that I wouldn't touch it, more or less. I mean, not, and, you know, technically speaking as well, CAD and MXN are suffering from the same factors of insecurity at the moment. So not a cross rate, even for macro reasons, that I would really want to be trading at the moment. I would definitely be looking elsewhere. Let me see, more questions. Measure last move, can reach again. Gold today at 1310. Okay, USD yen. There's a question about the USD yen. I already showed it, but let me say once again here that, you know, for me to be looking lower in the USD yen, I need two things. One is to see a daily close below this ascending channel. Then I would want to see at least 108.50 break to the downside. Okay, only then I would be assessing, I will start assessing if this move higher was a corrective one, or if this move higher was the first leg of, you know, a bigger move to the upside, because I want to see a move to the downside, which at some point is going to unfold, and I want to see what kind of structure it's going to have. Is it going to be corrective? Is it going to be impulsive? Then I'm going to feel more confident or more comfortable in, you know, in assuming what's happening here with the USD yen. Can you give a view on a particular stock? Sure. I mean, I've been monitoring the some of the most popular stocks, so I already have technical analysis on them. But yeah, I can have a look at whatever chart you want me to have a look at. Technical analysis is, you know, technical analysis, no matter what the instrument is.
Steve,
Okay,
do you mind
let me
having
remember.
a look at the afterwards at the Aussie Kiwi, please?
Look at my screen.
Oh, is that it? Sorry.
Yeah.
Very nice. Okay.
I wanted to actually show the Aussie Kiwi because we were saying how important this 107.50 area was. It was more than obvious that we're going to have another look to another push to the upside. Why? Simply because even if this is a corrective move higher, it should have one leg, a corrective leg to the upside, which is clearly this one, and one more leg to the upside at the very least. At the very least. So even, you know, the most cautious rebound scenario would assume one more push to the upside. We are seeing a very decisive break above 107.50. Next area of resistance comes at 108.50. If we also break above 108.50, I'm going to become even more constructive in the Aussie Kiwi. So that's why I remember to have a look at it, and you actually asked it at the same time, Stelio. I think that the Aussie Kiwi looks good. Obviously, it's now coming close to resistance, but if we do close above the 108.50 area, why not? We can even push higher towards the 113 area once again. Don't forget that this move higher began after breaking above a descending wedge. Descending wedges are very nice formations, very reliable formations from my experience. We're also seeing here from the RSI that the Aussie Kiwi is about to push to overbought levels, that's a bullish signal to me. So let's say even if we get a short-term rejection from the 108.50 area, why not we can move lower towards 108, 107.50, but as long as 107.50 is going to be holding as support from that point on, I will be remaining constructive. Tata Motors, okay. Can you give me please let me see if I can find it. Wait. There it is. Okay. Doesn't look that good to me. Let's see. Dale?
Yes.
We can hear you. So, sorry, is it? Did you want to say something, or your mic was just on?
Okay, I'll mute. I'll mute.
No problem at all. I'm just asking. You know, obviously you want to buy this, so I can tell you one thing for sure. The bullish scenario here is if this ends up being a wedge, a descending wedge. But even if that's the case, this might take more time to unfold, right? So this is your bullish case scenario. I would not be feeling comfortable buying Tata Motors, not unless it breaks above the descending trend line, okay? And you know, a horizontal area of resistance of some interest is this one, around, what is it, 370 roughly, this one. So you know, unless we see something like that, I would remain very cautious. We do have some RSI divergence, which is bullish. So I have to admit that. I mean, there are some signs that at least the downside momentum has been waning, but you need, you know, a lot more evidence to be buying and feeling comfortable about it, in my opinion. At least, you know, that's how I would view it. Okay, so that's what I think about Tata Motors. USD Swiss, yeah. Thank you for reminding me. I know that Blake showed that. I do think that USD Swiss is going to be correcting lower. We saw that like 3 days ago, and actually we did not violate the high that we posted that day. We retested it twice, yesterday and today again, and you're already seeing that today so far we're having a tweezer top candlestick. As you see, this ascending channel's resistance kept holding, kept restricting price action, and you know, today's candle seems to be a very bearish one, in which case I would be looking for support at the confluence of supports at 0.9850, 98.50 cents. Why? Because this is a confluence of this horizontal area of support resistance and this broken descending trend lines resistance. This time it can act as support. You can also monitor this ascending channel's support. So as you see, 98.50, an interesting area for price to be supported. Definitely. This has been an impressive move to the upside, extremely overbought. I mean, it's only healthy to expect some type of a correction lower. My pleasure, mate.
About Euro Pound.
Sure, let's have a look at it. You do have a guest today, don't you?
Supposed to. He's not here yet.
Remind me the name?
Don Mead at 7 Sentinels. He's been here once before.
Okay.
Confirmed yesterday.
Okay.
But you know, Steve, we're when it comes to interviews, there's only one problem. We're dealing with people.
Oh yeah, for sure. There's no question about it. So
Here he is. Don's here.
Perfect. So let me give you my view on the euro pound once again, and you can start your interview. So euro pound came down, retested this 87 area. You can see it here as support resistance. It has acted multiple times as support. We're seeing an impressive rebound from it so far. So, you know, we remain in the middle of this range. In the recent weeks, it has remained somewhat constructive, but I have to, you know, warn for caution once again. I mean, we've seen bearish moves, we've seen bullish moves, but as long as those are constricted within this slightly descending channel, I wouldn't be enthusiastic about anything. I can tell you one thing for sure: the 8870, 8860, 8870 area can act as resistance once again. The 200 daily moving average is there. It's also a horizontal level of interest. Definitely today's reaction seems a very strong one, so we might see some days of follow through, but I wouldn't be doing anything with it unless we finally break above or below the confines of this channel. When that happens, I expect, given the amount of time we've spent consolidating here, that we might get some impressive follow through. Until then, I would honestly not be doing much.
Well, yesterday I was shown that 87.31 was halfway back of the whole 220 pip move off the false breakdown. I'm working off the thesis that that was a false breakdown. The bears had a chance to get a go at it before you adjusted your trend line, and that there's still a lot of shorts in here and they're going to be squeezed, and I agree with your upper target.
There's a good chance, but in all honesty, many times we got false triggers, false signals in essence that, you know, finally this range might be breaking. So I would be extremely cautious. I would be extremely cautious. And
okay, I'm extremely bullish. That's what makes a market anyway.
Yeah, in any case,
right,
we're still far away from a bullish break, right? I mean, bullish break would be at this point in time anything above, let's say, 89.30, 89.40. So yeah, you know, we have some distance to that, right?
Yeah.
Okay, thank you. Enjoy the interview, and we'll be here tomorrow once again.
Okay, hi Don. Thanks for coming back to Face. I'm gonna make you the presenter. You had me nervous. I didn't know if you were going to show up or not. Glad to see your name in here, Don.
Can you hear me?
I can, Don. How are you?
Oh, wonderful, Dale. I think my microphone just came on. I was getting nervous myself that you weren't going to be able to hear me.
You're coming in loud and clear. Thanks so much for wanting to come back and do this again with me.
Oh, you betcha. I've been looking forward to it. I really appreciate what you do on the Twitter service. It's just terrific.
Thank you so much, Don. And you know, we've been through the journey part of it, and I know that I believe you're talking about a rainmaker. I saw that tweet. So
good.
Can you describe to our audience what a rainmaker trade is?
I can. I thought I would start, though, by talking a little bit about what my philosophy at 7sentinels.com is, or what my philosophy as a trader for my whole life has been.
You're the boss.
Then we'll get to the rainmaker.
Okay.
Early on in my career, it occurred to me from all my studies of the greatest traders of all time, like, of course, Jesse Livermore, that the only thing that really, truly matters to a trader is the direction of the market. Everything else is noise. The direction of the market is really everything. And, you know, Livermore had said that there isn't a bull side to the market or a bear side to the market. He said there is only the right side to the market. Right. So I've spent my life devoted to the proposition of identifying the right side of the market, getting on the right side of the market, and staying there. And Livermore also said that in a bear market, there are plenty of early bulls, but the man, of course, today we would say the person who can be right and sit tight is really rare. And so I wanted to talk a little bit about why that is. Being right is one thing. And we all endeavor to do that, and we all find our ways of doing that. But sitting tight, that's quite another animal. It takes conviction, it takes discipline, and it takes continuing trend measures that work. And that's really what we are all about at Seven Sentinels, is identifying the trend and then having the conviction and the tools to keep us on that trend for the duration. Okay, the rainmaker. By a rainmaker, I mean, if you take a look at, let's say, Livermore's career, I think you may know that he started in the late 1800s as a teenager with $5, literally, to his name. He started trading. By 1906, his account was worth $3 million, and that's the equivalent today of about 40 million in today's dollars. And after the crash of 1929, his account was worth $100 million, or the equivalent of $1.1 billion. He did that from $5. How you do that is quite a trick. And again, it takes being right and sitting tight. By a rainmaker, I mean, you know, we all think about from time to time how great it would be to find a trend, identify a trend, get with it, and have it be the real thing that really it makes it for us. We've heard many stories about people that did that in the past, like Livermore and others. But we always think, well, you know, that was another time, or that will be a time in the future, but not now. And what I'm saying is, we are, according to my work, on that rainmaker right now. This is the big one, in my opinion, that started in January of 2018. Now, currently, just to put that point aside, we're in a counter trend rally within that downtrend. But this is, in my opinion, based on my lifetime work, the big one right now. So that's what I mean by rainmaker. Okay.
So is it because a lot of the sentinels are off duty right now? And Don, do you see any shot of, I thought the NASDAQ 100 had a shot for maybe one more high to get a third drive. Someone else who's pretty good, what's his name? He does pivots, was looking for about 69.90 for a right shoulder.
I would not be one bit surprised to see that at all. And the reason, the one thing that is frankly out of place, it hasn't fallen into place just yet, to tell me that we may have seen, or that we have seen the final high, which, as you imply, indicates maybe it's still out there, yet to come, is the advanced decline line. The advanced decline line right now, this morning, I believe, is making another new high. I know it was only 300 units away. I don't have my screen in front of me. I'm looking at some other charts and things, but I don't know what the advanced declines are this morning. But if we have more than 300 net advances on the New York Stock Exchange, the advanced decline line is right now, as we speak, making yet another high. And that would imply exactly what you asked, Dale, that perhaps we have one more, what I call unconfirmed new high ahead of me before it starts falling apart in earnest.
Okay. So let me ask you this. When it comes to the NASDAQ, a lot of people don't like or talk about the erosion of like triple leveraged, bearish ETFs, bullish ETFs. What's your choice of instruments to take advantage of a bear market here?
Well, I do like the leveraged ETFs because they don't have the time erosion that options have.
Okay.
They don't have the relatively unlimited risk that futures have.
Good point.
And they don't have the inverse ETFs don't have the inconvenience of trying to go out and borrow stock.
All very good points. Do you use Quid for NASDAQ or what else?
For NASDAQ, I use the SQQQ, which is a triple leveraged NDX 100.
Okay.
And on the long side, the TQQQ, which is a triple leveraged bull side ETF for the NASDAQ 100.
Do you have do you diversify? Like for example, Don, the Russell is just a stone's throw away from new high.
Right.
It's had a lot of relative strength. I don't know if it's related to this dollar rally that we've had. It seems the Russell does better when the dollar's doing better.
Exactly.
And the transnationals don't do as well because they're losing the currency war for exporting. Do you expect a continuation of relative strength in the Russell? And what are your preferred shorts going forward? Also, do you have any time or is it price that you're looking at to initiate these positions?
It's really direction. It's always direction. When I have sell signals, I sell, and I don't ask why or where we're going.
Okay. Are you on one now? Are you on one now in NASDAQ?
Well, right now I'm long the market because we are in a counter trend rally. Let me talk about 7 Sentinels for a minute. The 7 Sentinels are, as I said, my attempt to answer the question of what is the right side of the market. And I've only spent about 45 years coming to the that particular instrument as my choice of answering that question. But the 7 Sentinels are 7 measures of market internals that I have discovered when all 7 go to an uptrend at the same time, that identifies a trend change to the upside that will stay in effect until all 7 go to a downtrend, which will identify then a turn to the down that will stay in effect until all 7 go back up.
Okay, so you need all of them to be confirming the direction. Does that usually get you into the market? Well, obviously you're not going to buy like an inflection point because it's going to take time to get your troops all to line up, right?
Correct. But now recently I've done a lot of work in developing 7 Sentinels in 3 different main time frames. Originally, I made them daily indicators. I would measure the 7 Sentinels on a daily basis, and when all 7 would give me a daily close that was on a buy, that would be a buy signal for the market, and when all 7 went to a sell, that would give me a sell signal for the market, and those were on a daily basis, and they would tend to, when I'd get a daily 7 Sentinel signal, it would tend to stay in place for typically 4, 5, 6 months or more.
From your daily time frame.
Yes.
Okay.
I have now developed, I began developing last year or the year before a short-term Sentinels measure that uses the 2-hour measure. I call it the STS, or short-term Sentinels. And I now have found that my short-term Sentinels are better for
swing,
determining my trade itself, than the daily. What I do is when I get a short-term Sentinel signal, I go with it, and when it's confirmed by the daily, I'll go up to 100% long or short. When this daily is not confirming it, I'll limit myself to 50% long or short.
Interesting. Nice.
Now, recently this year, I have discovered that the weekly 7 Sentinels is a beautiful instrument for telling us when the primary trends change. When we get a primary bear market starting, we'll get a 7 Sentinels weekly sell signal. When we get a primary bull market starting, we'll get a 7 Sentinels weekly buy signal.
Let me ask you on back testing, are you usually, when you go out and use your telescope on the weekly and your sentinels are astronomers, longer term, do you miss the first 10% move for all your weekly soldiers to line up in formation?
Well, interestingly, on this latest signal, it occurred on, what was the date? I think it was February.
Okay.
February 4th.
Oh, yeah, so you got it right near the top.
Either. It was actually February 17th. So it was, it was what, 2 weeks after the down move really began. The beauty was, though, that my daily had gone to a sell back on January 30th, and my STS had gone to a sell back on January 29th. So that's the beauty of it. They kind of fall like dominoes when.
So you kind of when you have confluence of time frames. I know with the stuff I do, I like to have, you know, I'm shorter term than you. The 4 hour and the 1 hour divergence setups in agreement with each other. So you had one of those probably pretty rare signals where they all line up together.
Definitely, and that's definitely true, Dale. And that's exactly why I use the rule of only going to 50% when the STS is out there all by itself, but I'll go to 100% when the daily backs it up and is in agreement.
So which of your time frames has you on a long right now? Is it
the
weekly?
STS is on a long and the daily is on a long, and that surprised me, frankly. I didn't expect to see the daily go to a long, but I am 90% long right now, and I got there on Monday. On Monday, I began to see the signal falling into place and started covering. On Tuesday, when I got confirmation that it was indeed in place, I started going long, and then yesterday I completed most of my buying and have gone to 100% long.
Okay, so let me ask you this then, Don. Is it strictly the stock market? Do you do anything with sectors, or it's mainly just the general averages?
I do this. I follow the, I use the Standard & Poor's 500 as the basis for the 7 Sentinels themselves.
Okay.
I watch that closely. I watch the Dow Jones Industrials closely. I trade the NASDAQ based on signals within the 7 Sentinels that are unique to the NASDAQ. And I also trade the Russell 100. Oh, and you asked a question, do I think that the Russell 100 is going to lead the way or make new highs? I think it's going to make new highs here because it's so doggone close right now when all the others are so far down.
Have you noticed that correlation? Strong dollar, strong Russell, weaker dollar?
Well,
go ahead.
To be perfectly frank, I had not been watching that, but I did read a couple of comments to that effect in the last couple of days and started paying attention to that. It isn't something that had gone across my radar screen before the last couple of days, but for sure that is happening. And I'm sure there's a logical explanation. I haven't really thought that one through. All
right, so we know that you have a long-term bias, but the weekly is still on a sell signal.
Yes. Well, the weekly is on
daily
a sell. Yeah, the weekly is on a sell, which would indicate to me that the bear market has begun.
Okay.
The daily and the short term are on a buy, which indicate that we are within we're in a counter trend rally now within the bear market.
Okay.
Now,
so do you have? So you don't have any price projections. You're just going to stay with the long until your short term and daily flip. And let me ask you this: what are your expectations for this rainmaker once the daily and short term start lining up with the weekly.
I often say in my comments on the 7 Sentinels that I never trade on my expectations. I only trade on my signals, but like everybody else, being human, I have my expectations, and I expect that this bear market is ultimately going to be more serious than the 2008 bear or the 2001, 2, 3 bear.
Okay. Okay.
And the reason I say so relates to another article. If anybody is interested in taking a look at the 7 Sentinels website, there are a number of pages at the top that are available to anybody to read.
Why don't you show that, Don? Can you show your website and those pages?
Now, are you looking at the page now that shows a chart with some lines, vertical lines on it?
Yeah, the NASDAQ. Yes.
Yes, indeed. Okay. Let me put the website here. Here is a look at the 7, you can see that, right?
Yeah.
7sentinels.com. Okay, you see up in here where my mouse is, those are all articles that are open to the public to read anytime they want.
Okay.
The one that you have made reference to, I highly recommend for anybody to read because there's a lot of information in there. And that's the one called Rainmaker. It's lit up right now, as you see.
Yeah, we could, you know, the world is starting to understand water shortages. So I know Rainmaker is a metaphor for financial windfall, but it's an interesting metaphor that there is a shortage of rain, and you know, that has a lot of people very bullish agricultural markets.
Interesting. Yeah, I hadn't thought of that connection, but that's so true. I've always liked the term since I saw that movie with Dan DeVito and well, what's his name? Anyway, about the attorneys that took on the insurance company.
Oh, yes. Okay.
That movie was Rainmaker.
Yeah, I think wasn't that Matt Damon was in there?
Matt Damon, exactly.
Yeah, okay.
That was a great movie. I love movies like that about, you know,
poetic
David and Goliath.
Yeah, Don Quixote. Or maybe we see ourselves as Don Quixotes, you know, trying to battle the windmills.
I think we do. Okay. I think we do, because we are up against some pretty massive forces all by ourselves.
Okay, well, what a beautiful looking website, Don.
Oh, well, thank you. But anyway, up at the top of the top of this page are a couple of articles, one called Rainmaker that I highly recommend, because in this article, down within the article here, as you see, I give a list of
your 7 Sentinels.
No, I give a list of 10 things that occurred between November 2016 and January 2018 that were all-time record warnings or bull market top indications that we had never seen before, ever. All
those Hindenburg omens that just kept gliding across the country as people sip champagne. That never blew up, right? Okay.
We had more Hindenburg omens in 2017 than in any other prior year ever.
I lost money being bearish in 17.
We had more black swan. We had the highest, second highest, and third highest black swan indexes from the CBOE Black Swan Index in 2017. And just all sorts of records. The lowest skew, the lowest VIX ever, the highest greed measures ever, and so on and so on.
And probably the biggest presidential cheerleader for the stock market in America's history.
Right. Yes.
Have you ever seen that before? I never saw the Bushes or the Clinton or Obama or Reagan, any of them, take credit for a bull move in the stock market.
Oh, I know. And I kept thinking all through, November and December, when our president kept saying the Dow has made another high, and it's made all-time record high 57 times this year, or whatever it was that he kept saying every day. I kept saying, wow, he's in dangerous territory, because if he's going to take credit for the new bull market highs, he's going to have to take credit for the for the declines when they come.
No. He's going to blame you, Don Mead, and your
Yeah.
7 Sentinels.
Yeah,
So,
you're right. Yeah.
Look out for that NSA. They're going to go, except for Don Mead, this
Yeah,
market still would have been going up. But
yes,
Don,
he's probably
thank
going
you.
to say that I'm working in tandem with Hillary Clinton on that.
Thank you so much for coming back. Any last thought you want to wrap it with?
No, other than I would highly encourage anybody that's listening to read 2 articles, especially from the top here. One is called Rainmaker, and that we just talked about. The other is called Primary Bear Market, and it lays out exactly why I say that we are now in a primary bear market long before anybody else is saying that. I don't think very many people are saying that.
They aren't.
But
No.
my indicators are definitely saying that, and it's worth a read.
Okay.
But no,
Okay.
that's about it for now.
All right. Well, you know what? A required reading going forward into this year. And Don, you have a subscription model, so people could subscribe to your letter so that they know when the Sentinels flip. You inform
Yes,
your.
and if you look on Twitter, I often run these specials for $9.95 for 14 days, just to get an idea of what it's all about, so somebody can try it out for 14 days and see what it's all about.
What a great value! So Don is a veteran. He's my trading warrior brother, and I will be staying in tune. And maybe you could do me a favor, Don, and ping me when you have your other stuff flipping. And
absolutely.
So I could, I bought an umbrella. I'm ready for the Rainmaker.
Okay. All right, Dale.
Thank you.
Well, I sure
you,
appreciate what you do here. It's I think you are the kindest person on all of Twitter, and the most generous with your time and your energy and everything else. So anyway, I hope you have a terrific day and week.
You know, I was raised by my mother. I have a lot of estrogen, so I'm known as a sappy guy at Forex. I have a tear in my eye, but I'm maybe it's a drop of rain.
Well, so do I.
Maybe it's only a drop of rain. And Don, really, I respect your work. Thank you so much for coming here to Edify Faith today, and we'll pick it up.
We share that emotionalism. By the way, that we share another thing too. I've seen your picture on there from time to time singing. Are you? Do you do karaoke?
Oh yeah, that was my marketing strategy to meet women.
All right.
I met my wife doing that. Yeah, so
I've been a karaokeer for the last 20 years myself.
Yeah, it's fun to go up there and see if people ignore you totally or watch what you're doing.
Yeah. For 3 minutes
how
you
many
get to pretend like you're somebody famous. Yeah.
Anyway,
I'll let you get back to what you're doing, Dale, and I thank you a million for all of this.
You're very welcome. Ed Schaefer is thanking you. A lot of people are thanking you for what you brought to the table today, Don. So may the rain turn into a flood and overtake you with profits during this primary bear market is my hope for you and all your readers.
Thank you, my warrior trader brother.
All right, Don. Adios.
Right. Take care.
All right, Face, that's a wrap. Thank you, viewers from investing.com. Check Don's stuff out. I usually don't bring people back unless I think they have a lot of value to add to our community, and Don is certainly one of those people. So have a great Thursday, dollar breaking, euro pound going up, and we'll wrap up the week tomorrow with what's happening in metals. I have a gold guy coming in tomorrow, so see everyone for TGIF. And most of all, don't just count your pips, count your blessings. You're welcome, Stephen, Susan, Kareem. See everyone tomorrow. Adios. Thanks again, Don.